2023 is set up to be an interesting year. Inflation is running rampant, interest rates are set to rise, and the stock market is still topsy-turvy. One of the best ways to navigate this financial maelstrom is through a risk-adjusted strategy of saving and investing. Some of the best types of investments for 2023 include high-yield savings accounts, government I-bonds, and well-diversified ETFs. Investors who can afford more risk may also look into alternative investments, like commodities and cryptocurrencies, to boost their returns. But already, 2022 has proven that it's not a typical year. Inflation is on the rise. Bond yields are going up, while CD rates remain abysmally low. And the Federal Reserve is debating up to 3 interest rate hikes this year, to curb the runaway economy. All that to say, knowing where to park your money right now isn't easy. That's why we've rounded up the best type of investments for 2023, to help you protect your financial future. So, let's dig deeper then. Number 1. High-yield savings accounts. High-yield savings accounts keep your money liquid, while generating a little return. Although they rarely keep pace with inflation, this is one of the best places to park cash you need to access quickly, such as your emergency fund. Plus, there is close to no risk as you can get, as reputable accounts are FDIC insured up to $250,000. Unfortunately, no high-yield savings account pays anywhere near the 7% inflation we've seen in the past year. Most boast around 0.6% returns, compared to the national average of 0.06%. That said, with the Fed looking at hiking interest rates, many savings accounts may see their returns go up, too. There's one caveat when it comes to variable rate accounts, however. These offer a rate at opening that is subject to change. Number 2. Certificates of deposit, CDs. If you don't need to access your savings in a hurry, and want to capture a little more growth, a CD may do the trick. These accounts are issued by banks, at a higher fixed interest rate than most savings accounts. Right now, the best CDs are paying around 1.25%. They also enjoy FDIC insurance protection, making them ideal for risk-averse investors who want to minimize the eroding power of inflation. Generally, CDs are considered short-term to medium-term investments. Once you put your money in, you can't access it, without penalty, until the maturity date, which ranges from 6 months to 5 years. As such, you shouldn't invest any funds you'll need in the foreseeable future. Number 3. I-bonds. I-bonds are a type of government debt issued by the U.S. Treasury. Unlike traditional savings bonds, I-bonds adjust their interest rate every 6 months to keep pace with inflation, making them hands down one of the best types of investments in 2023's inflationary environment. That said, I-bonds do come with limitations. To start, you have to hold them for at least 5 years, to keep all the interest you earn. And you can only purchase $10,000 worth per year, though you can put an additional $5,000 of your tax refund into I-bonds. Number 4. Index funds. Index funds are investments that track various indexes in general composition and returns. For instance, you can buy an index fund that tracks the S&P 500, or the NASDAQ 100. Some index funds specialize in specific sectors or industries, allowing you to add exposure to areas of interest. Index funds come with perks like high diversity, low expense ratios, fees, and ease of access for individual investors. You can buy funds that trade as either ETFs or mutual funds. Typically, ETFs trade like stocks and have lower costs and investment minimums, while mutual funds only trade once per day at closing. Most brokerage and retirement accounts allow you to invest in index funds, with just a few bucks. Though they come with more volatility than savings accounts, and government I-bonds, they're often considered one of the safer ways to invest in the stock market and beat inflation. Number 5. Other exchange-traded funds, ETFs. Exchange-traded funds are similar to index funds in that they invest in a large basket of securities. Then, they package their investments into individual shares that trade on an exchange just like a regular stock. Many ETFs buy into a particular index, sector, or commodity, allowing investors to specialize a portion of their portfolio. ETFs share several perks with index funds, including their low costs and easy portfolio diversification. Plus, many ETFs come with greater tax efficiency than handpicking individual securities. And most retirement and brokerage accounts permit ETF trading, making them readily accessible to investors of all stripes. Number 6. Dividend stocks. Dividends are small cash sums paid to shareholders out of a company's profits, to reward them for owning stock. These payouts make them one of the best types of investments for 2023, for boosting gains and minimizing the effects of inflation. As an investor, dividend stocks let you earn a little cash in the short term, while also benefiting from long-term rises in share price. You can also reinvest your dividends right back into your portfolio. But dividend stocks aren't without their own risks. While they're often considered safer than growth or non-dividend paying stocks, not every company that pays a dividend is a worthwhile investment. Some even pay unsustainable dividends to encourage investors to buy in. As such, you may want to shop around for dividend stocks that have a history of regularly paying and increasing their dividends. You can also buy into well-diversified, dividend-focused ETFs and mutual funds. Number 7. Alternative investments and cryptocurrencies. In investing, there's often an inverse correlation between risk and reward. The riskier the investment, the more you may stand to make. Often, that risk isn't negligible. You may stand to lose your whole investment off one hiccup in the market. But if you want to make money in a volatile economy, alternative investments like commodities and cryptocurrencies can prove lucrative. However, you may still want to minimize total exposure to these two categories, to avoid taking on too much risk. In this video we brought you the best investments for 2023. If you got this video helpful, please give a thumbs up to the video. Don't forget to share this with your friends. Subscribe the channel for more important videos like this. Thanks for watching.